Welcome back to Zodiac Trading Channel. So today what we're going to talk about is we're going to talk about inflation. Why are we going to talk about inflation? Because come on, the whole world is talking about inflation. The Wall Street is also talking about inflation as well. And the reason why we're talking so much of inflation is because right now we're going to experience one of the largest recession in our lifetime. And because of that, and that's the recession itself is purely inflationary because we have this unstoppable inflation and causes all these commodity prices and food prices and energy prices gone up. And lots of people been saying it's because of the Ukraine-Russian war. Of course, the Ukraine and Russian war is one of the reasons why we're having these monetary inflation. But I'm afraid the other part of inflation comes from the monetary inflation because apparently the U.S. government, the Biden administration, been printing too much money for too long. I think that explains uh, what the financial system has gone wrong today because we have gone through like nearly like limitless of QE. We have lots of quantitative easing, and after 2020, we had a tremendous amount of liquidity inject, and the U.S. government basically uh, allows, I would say, the U.S. government been allowing that the Treasury to purchase unlimited of different assets. We're talking about ETF, we're talking about rates, we're talking about mortgage-backed securities. Uh, and the treasury can buy, and central banks been buying all these assets, basically copying what the Japanese central bank's been doing for so long to keep the economy machine going. The similar scenario happened during 2008 while the Lehman Brothers collapsed, one of the biggest investment bank around the world has gone bankrupt. And the U.S. government decided, the Fed and also the Treasury decided that they will come up with a program called TARP, right? Trouble Asset Relief Program, TARP, so they could fuel and to um, put an endless amount of liquidity back to the financial market again. And that causes the big problem because um, we have um, a very, very low interest rate, and we have the Federal Reserve, we have all the central banks buying all the assets at any possible prices. Basically, we had good days, right? Because the government's bailing the investment bank out, and then government is artificially inflating all the asset bubble. The rich people during that QE sessions, they are making lots of money out of stock markets. They are making lots of money out of the real estate. So the asset bubble got fewer because of central bank policy. Um, the ex-chairman Ben Bernanke tried to use this gimmick so the U.S. economy wouldn't have to collapse because of the what happened in 2008. You had a subprime mortgage crisis, you have mortgage problem, huge problem, and you also have a derivative meltdown because apparently a lot of financial institutions they are betting heavily on the subprime mortgages through derivatives, even though some of the institutions they are not aware of that. They are not aware that they've been purchasing a lot of assets. Um, some of the fund managers don't even aware that they are buying the subprime mortgages and also the CDO, right? So that's how the financial collapse and meltdown were affecting the whole economy system. And then the Fed came and then figured out how can I save the U.S. economy from this hellhole. So they decided that they could, start QE, quantitative easing. They could put They can start printing money, and then they can start suppressing long-term yield, and then they can, start buying all these assets at the very fast pace, and then they can basically become the last lender of the economy system. And then what happened is when you lower that interest rate to nearly zero, and you have to figure some way to normalize the economy system, meaning that you have to raise the interest rate back to maybe the rational level. We're talking about maybe one like 1% or maybe 1.5%, that kind of range. But you have to do it like on a basis point kind of fashion. You cannot like raise just 1% just like that. You have to raise like 25 basis point and slowly to adjust that interest rate back to normal. We call this normalization. So the normalize interest rate normalization was taking place in 2011, and that went on quite bad because the market was simply not the stock market were collapsing and asset price were down, and basically the financial institutions hate the fact that the interest rate is going back to normal, right? So we call this kind of like a taper tantrum. We had that, and then after 2011, and then it come and then everything goes smoothly, and people could just keep buying stocks and cryptocurrencies, buying properties because of the endless liquidity. And after that 2020 COVID-19 kind of meltdown, and then you start having larger amount of QE, and the asset prices first collapse and then went high up, and then now you have monetary inflation, right? Because the government been printing money for too long. Start from 2008 and now is 2022. We've been printing money for nearly 14 years. Now that's a very, very long time. And because of uh, the Ukrainian war, the Russian-Ukrainian invasion, that kinds of disrupt the supply chain and also bring up the commodity cost, and having these wages going up, and also energy prices go has gone up like crazy, and this whole thing has been creating this inflationary scenario. So basically that means the companies, corporations have to pay more, and they have and also make less money, I guess, because the cost is increasing, the profit margin is shrinking. So that's why you have less desire to maintain that kind of employment rate. You have more and more companies firing people, cutting up job supply, and then because of the um, energy prices, the food prices, and nearly everything is, every kind of price is going up. So you have to, as a normal people who only has one income source, which is, go to find a job, unlike other rich people, you have to max out your credit card, right? That means that you have to borrow a lot of money to compensate so you can have the same life standard. Otherwise, you cannot, without the support from government, without the credit card, maxing up your credit card, it's very difficult to maintain the same living standard, because the petrol price has gone up, and the rent has gone up, and also the food price has been gone up, and all these things has gone up like insane. So that is the problem right now. The shrinking demand of the economic system is basically damaging the entire economic system. So, and the government, I think the one of the worst problem of the Biden administration is that they purposely ignored that they are the one who creating all these monetary inflation. Of course, you can blame Russian people. You can blame the invasion. It's evil. I never, I never denied it. But the Federal Reserve has to realize the reason why this inflation keep being so long and so stubborn is because there are the major part of that inflation, that input of the inflation is major, it mainly comes from the monetary inflation itself. Basically means that you're printing more money than you should, and then you are printing money for too long than you should. So that's the problem. And also we are seeing the current markets going down, and from my perspective, I believe we're going to have a total market meltdown. We're going to see S&P continuously fall below nearly, I don't know, like maybe 3,000 points and even below. And we're going to see a lot of companies gone, bankrupt. We're going to see more defaults. And for people who are very smart and for intelligent investor, of course, what they will do is they probably do three things. So I'm going to share it to you. The first thing what they're going to do is they're going to maintain certain amount of liquidity. Of course, during it's very difficult to find stocks to invest or say stocks to buy during the market meltdown because most of the stock prices just nearly just go down, right? It's difficult. Otherwise, you have to bear the kind of pain holding the stocks. But what you can do is you can maintain certain amount of cash, and you can be patient and wait for liquidity to coming back, and you can find the right stocks to buy. But definitely not now. You have to be patient. The second thing I recommend you to do is that you have to hold dollar, right? So the biggest issue is that dollar index is still going up. So most of the emergency currencies are going to suffer. So you're going to lose a lot of purchase power simply by holding emergence, I would say EM currency. So what you can do is by holding dollar, you'll be making more money than other portfolio managers. And the last thing you're gonna do is you're gonna pay back most of the debt, so you wouldn't be because the interest rate been rising. That means you're going to suffer apparently because you are if you have mortgage, that mortgage cost is going up, and also the collateral value is going down. That, for example, when you're buying a house in U.S., the value of that house probably be going down, and when the interest rate go up, the the rates that you're going to pay for the mortgage are going up as well. So you're going to pay more to buy a less value property. So my suggestion is that forget about it. This is not a good time to buy any property. Definitely not a good time. Otherwise, well, there is of course one exception. If you're going to marry and then your wife is like, you have to have a house, right? Otherwise, she will probably divorce you. In that case, I think you can buy a house, right? But okay, so that's about everything that I'm going to mention in this video. So if you like my content, please press that like button for me and please share it. And you can also click that bell button for me so you can receive the latest upcoming episode. Mostly I will upload my economy views and how I view the markets on a weekly basis. So thank you guys for watching. I will see you in the next episode. Bye.